Welcome to the Strategic Investor. Join us as we interview some of the world's most productive asset managers and uncover sophisticated and unique investment strategies in the markets. Here is your host, Charlie Wright.
Hello and welcome to Strategic Investor Radio on OC Talk Radio, where we bring you investment strategies you are not hearing elsewhere. We're very pleased you've joined us today, and today we have our third show on cryptocurrency investing, this time with a hedge fund that invests in cryptocurrencies. So we'd like to welcome Ken Goodman, founder of Altcoin Advisors, a hedge fund investing in cryptocurrencies. He speaks to us from the headquarters in New York City. Ken, welcome to Strategic Investor Radio.
Yeah, thank you so much for having me.
So, Ken, your background, you graduated with an undergraduate honors degree in mathematics and took only 2 years to do it. You're now completing a master's degree in machine learning from Georgia Tech. You are an adjunct mathematics professor. You spent time with Golman Sachs as a quantitative developer with risk-reducing techniques through quantitative methodologies, and you are passionate about blockchain, machine learning, applied statistics, quantitative development, and mathematical reasoning. Your photograph on your website doesn't indicate you're old enough to be into all of those things and to have that much of a background. So give us a brief background of yours, will you, Ken?
For sure, yeah. So I'm super passionate about mathematical techniques to model things. And so currently what I'm doing is using machine learning, which encompasses statistical arbitrage and other statistical methods to value and predict the price movement of cryptocurrencies. I got into cryptocurrencies about 18 months ago, and about 6 months ago just fell down the rabbit hole a little too deep that I'm just loving it here.
Okay, well, tell us now about Altcoin Advisors.
Sure. So Altcoin Advisors is a cryptocurrency hedge fund. We take a quantitative approach and trying to do statistical arbitrage, which is sort of like trying to invest a whole bunch of times. And if you invest enough times and you're right more than 50% of the time, your expected value is positive. And we are systematic, so trying to be completely no touch and have computers trade. This market does run 24/7, so you can't have someone up all day, of course.
Yeah. So for those of our audience not that familiar with cryptocurrencies, however, we know that there's been a ton of educational material that's gone out to the public just in the past couple of months because of the run-up in the marketplace. Educate our audience very briefly about cryptocurrencies, will you?
Sure. So a cryptocurrency is something that's secured cryptographically. And so what we mean by that is that if someone says they own something, you can prove that they actually own it. And so a use case might be something like movies, right? Something like BitTorrent is a peer-to-peer system where people transfer value in terms of movies to each other. But the reason why these things aren't in the marketplace is because someone can just copy and paste the movie and send it over to you, right? But in money, you can't do that. You need some way to ensure that when I send money to someone else, that I can't just copy and paste it and give it over to you, right? Dollars, we have the whole Federal Reserve System where they try and make it very hard to counterfeit dollars. And then in the monetary system, in the digital world, we have either PayPal or Venmo or a bank that sort of makes sure that everyone doesn't print double money. But of course, there are ways to do it, right, with hacks. This is a brand new system that was invented about 9 years ago that says, okay, what we can do is we can have a peer-to-peer system and still have value secured, and we don't need a centralized bank that can get hacked. And so the Bitcoin system is almost impossible to be hacked, and so you can take away the counterparty risk, even if the counterparty is JP Morgan, which very few people are afraid of, but in other countries, people are afraid of the banks that do exist in their country. And so blockchain, which is the fundamental technology behind Bitcoin, has allowed us to create this value and digitally secure it without a trusted counterparty.
So tell us, what are the primary misconceptions that so many investors have and most people have about cryptocurrencies?
Sure. A lot of people have a misconception about something like maybe there's some CEO of Bitcoin that can just print out more money. The technology is so advanced that it is sort of the centralized authority here that makes the rules. So when the rules were created at the start, right, they could change over time, and we can get into that. But generally, most of the rules are sort of accepted by everyone. And so there's a set amount of inflation that will eventually become deflationary, and there's no singular party that controls this. There are a couple different parties that are sort of help make changes in the Bitcoin technology, but it's not a singular person or a group of people or an oligarch or whatever. This is a distributed technology where tons of people sort of power back to the value users and value adders.
And we know, Ken, that we all know Bitcoin, and blockchain is the system that verifies and confirms it. But now there's Ethereum, and there are, I understand, 800 plus additional cryptocurrencies. Do you guys deal with all of those, some of those, only Bitcoin and blockchain? What do you guys deal with?
Sure. So we deal with, we're open to deal with any coin that's liquid, trades on an exchange that's regulated, and so that we don't have to take some regulatory risk or counterparty risk for those people. There are at least 800 that are marked just with some value, right? Anyone can create a cryptocurrency out of thin air, but it doesn't mean that it will have value, right? Anyone can say that something is money until everyone agrees that it has money. It doesn't really have value. And so we invest in currencies that have tons of liquidity or that have a very special use case that we think might be the next Ethereum or the next big cryptocurrency.
Okay, so that brings us to the next question. This is, as you just said, so somebody made up Bitcoin out of thin air. What gives it value? The fact that
Sure.
that it's currently trades at $5,800, what gives it that value?
Sure. So I would break down cryptocurrencies into three different categories. There are actual cryptocurrencies, and these are things that are meant to simulate currencies like the US dollar. There are crypto assets, and this would be something that is tied to an asset. So you might think of a diamond or gold on the blockchain, and so when you buy this asset, it's sort of redeemable for the gold. That's really all it is. It's actually what the gold is worth. That's how much this thing will be worth, and it's tied to something in the real world, physical and tangible. And the last thing would be crypto tokens, and this would be analogous to something like raffle tickets that you can do at maybe some type of carnival or airline points, right? They're not actual currencies, but they could be used to buy things, and maybe only in a specific area, so airline points only for flights. But here, if we put it on the blockchain, we can secure it, but also give it some market value. And so what gives each of those value is the assets one is pretty simple, right? Whatever traditional assets, those have values. For the currencies, it has to do with how much supply and demand there is, obviously, right? Simple Econ 101. And there is a very speculative piece to this, and say, like, if a lot of people want it and there's not enough of it, because right now there's only about 17 million Bitcoins, you can split it into a whole bunch of decimal places, so it's not like you have to buy a full one. But as more and more people want it, and there are a lot of people who are still holding it for the speculation that this thing might go to 100,000 or whatever, I'm not saying it will, just some people believe that, then the value will start to appreciate. Now, what is the inherent value here? It's some of the use cases and the technology network. So at this point, it's estimated, we did the analysis about a month ago, that the Bitcoin network itself, which is all the peer-to-peer nodes that are helping Bitcoin survive in a secure fashion, it is on the order of hundreds of thousands of times bigger than the Google network in terms of hashing power. And so that is something that's truly remarkable, in that it isn't like some government can just replicate this. It will take a lot of money and a lot of time to sort of attack something like Bitcoin. That's maybe why Bitcoin is more valuable than some of the other cryptocurrencies.
And who is buying Bitcoin right now? Are they Americans? Are they libertarians? I mean, of course, you don't know if they're libertarians, but throughout the world, who's buying them? And what's the prevailing opinion of why people are buying them now?
Sure. I would assume that there are tons of people who are buying it purely because the price went from somewhere around $8,900 at the beginning of the year and is now trading at about $5,800 with a high of $6,200. And so when you can get 6 times your return in a year, I would assume that tons of people are just going to buy it just because. There are about 30,000 new users right now onboarding onto Coinbase, which is the biggest U.S. exchange, every day. And so a ton of Americans are onboarding, and Europeans. Korea and Japan have actually become the biggest markets right now in terms of number of users, as the exchanges moved out of China. A couple of weeks ago, the Chinese government banned exchanges, Bitcoin exchanges, and any cryptocurrency exchange. And so Korea and Japan picked up a lot of that volume. and so did the U.S.
And how about places with very unstable currencies, fiat currencies like Venezuela and Zimbabwe and places like that?
Yeah, Zimbabwe is actually right now trading, I think, close to $10,000 a coin comparatively to the 5,800 that we talked about in the U.S. And this is in U.S. dollars both, even if you do the conversion rate. And so there's not tons of liquidity there, but people are doing it. Venezuela also has very high inflation right now, and so tons of people there are saying, okay, even if this thing is super volatile, a 20% drop is not so bad compared to the 100% inflation that I might see this year. And so tons of people are saying, okay, let's maybe move away from this system and move towards cryptocurrency. And even though it's volatile, it's getting less volatile, and it is appreciating, so there is that speculative nature to it as well.
Ken, this again is fascinating, as these cryptocurrency interviews always are. We need to take a quick break. When we come back, let's talk about your particular expertise and passion for mathematical modeling and how you plan to apply that to the cryptocurrency marketplace. Again, we're talking with Ken Goodman, founder of Altcoin Advisors, talking about a hedge fund investing in cryptocurrencies. You're listening to Strategic Investor Radio. I'm Charlie Wright, and we'll be right back.
All right, time for the tip of the week. Charlie, what do you have?
Paul, today we've got a tip of the week for advisors. We're talking with Troy Weingarner of Advisor Financing. They finance independent RIAs. So, Troy, we've heard that there are a third of all advisors are over 60. And I heard recently at a conference that there are more CFPs over 70 than there are under 30. So this is a prime time over the coming few years for people to really start selling their practice. Typically in the past, the preferred method has been SBA. Is that still the case today?
There is a tremendous demographic shift going on with retiring advisors. And yes, that has been the typical choice of SBA lending. But frankly, SBA lending doesn't work well in the financial advisory industry. You can't do partial buyout. So a junior buying a senior, it's very limited. The terms are not advisor friendly, generally higher rates, generally you have to secure it with your home or residence. The good news is, Charlie, we have conventional lending in the marketplace. We've been able to bring conventional lending with better terms, better rates to the marketplace.
Okay, so for those who would like to know more here, Troy, where can they go?
Sure. Our website is advisorfinancingllc.com. We have a lot of information and a program overview for our lending program.
Okay, very good. Troy, thank you very much for joining us today.
Thank you.
All right, back to Charlie and his guest.
Thank you, Paul. Again, back to our very interesting conversation about cryptocurrencies with Ken Goodman, founder of Altcoin Advisors, a hedge fund who invests only in cryptocurrencies. So, Ken, tell us, how do you apply your mathematical modeling that you came up with in college, you're using now through your master's degree out of Georgia Tech in machine learning, and that you applied at Golman Sachs as a developer of such mathematical models? How are you using that with cryptocurrency?
Sure. The cryptocurrency market is a market just like any other. It's way more volatile and it's got other factors that play into it. But there are some fundamentals in markets that we do think still apply here and that we are using. And so standard statistical models where we try and see, is there some pattern that you can find? And so if you can find the average of maybe what it should be, you say, okay, how many standard deviations are you away from the average? And the more standard deviations you are away from the average, the more significant this event is. And so you can say, okay, if it goes 3 standard deviations away from the average, then either the average has sort of got to catch up to it in some way, and so it might revert back to the mean. And so a lot of this stuff is just mean reversion, just with the right data. And I would say it really matters less about the complicated neural net or model that you use and more about the data. And so if you don't have the data that predicts what you're trying to predict, and here it would be price, then it doesn't really matter what model you use if you don't have the right data, of course.
Ken, as we all know and experienced through the explosion of the internet, there were, Earthlink and other companies, MySpace, and others that were first in their space and now are almost unknown, and others have taken over. So it's very possible that cryptocurrencies could be very strong 10 years from now, but may not be Bitcoin. So you are looking at all of them, some of them. How do you determine who to look at, especially when it's nice to talk about mathematical modeling, standard deviations, but if there's very, very little activity and volume in there, there's really nothing to measure. So how are you dealing with that?
Sure. That's probably one of our bigger problems, is that there isn't 20, 30 years of data to look at. The market sort of changes every 3 months in our vision, and maybe even closer to a month. And so we sort of have to reinvent ourselves every month or two and say, okay, how are we going to model it now, and what has changed in terms of who is trading this, right? 2 months ago, the Chinese government still allowed cryptocurrency trading, and so people were still trading it there, and now they aren't. And so these things do change, and we constantly change it. But we have a much shorter horizon in terms of our position than maybe some other funds or some other people. And so if Bitcoin goes down, and in 10 years, we'll have gotten out of that position way earlier than that. And so hopefully our models will be able to predict as Bitcoin is slowly having its descent, as well as just, I guess this is where a lot of the touch comes in, until we can get computers to fully understand text, which is a research problem in and of itself, but what is actually happening in these currencies. So I've read through a lot of the code. I'm not a Bitcoin expert per se in terms of the code, but I understand how it works and sort of follow along with the developer community. I follow along with, there's a couple of researchers that really put out some good papers about how we're going to move Bitcoin forward, or maybe what the problems are. And so we're sort of looking at what are people saying, or how do people feel about these cryptocurrencies? Because I agree, someone can come out tomorrow and make a much better one. You would just have a lot of hurdles because Bitcoin is so strong right now.
So, Ken, let's talk for a minute about the legal issues for investing. Many of our listeners are investment advisors, professionals, and they have to deal with registered securities or exempt registered securities. And as often happens, especially in this case, the market has preceded the regulators. So in terms of advisors using cryptocurrencies for their clients, where are the regulators today in terms of these being registered products, securities?
Sure. So I'm not a lawyer, and so I'm not giving legal advice here. This is just my understanding from speaking to lawyers and other experts in the field. We've sort of got to look at three different regulatory bodies who look at this all slightly differently. And so there's the SEC, the CFTC, and the IRS. The IRS, in my understanding, views it very similar to property. And so this is a super interesting conversation about what happens when you have chain splits. Something like that happened with Bitcoin Cash, Bitcoin Gold, and SegWit2x, which is going to happen in a couple of weeks. And what are the implications there? There's the CFTC that views a lot of these things as commodities, right, and says definitely any future and option, that's going to be a commodity, and they sort of hold the regulatory approval there. And so Ledger X was approved, and so that looks okay. And Ledger X, the CFTC has been finding people who are not holding up to their standards. And then there's the SEC, which is looking at securities, and specifically they're looking at the ICOs, which for people who don't know is some mixture between IPO meets crowdfunding. And so people have been able to raise $100 million from a million different people. And so this is a new crowdfunding technique to create new currencies or new tokens. And so the SEC has been very strict in saying that if you're going to offer this to U.S. customers and there's some guaranteed or you're promising maybe some return, then this might be a security. And they've put out a couple papers, and so they're sort of trying to talk about it and figure this stuff out.
Okay. So we don't know right now. Is there any time frame that anybody's given us on an ETA, on any direction here?
So the CFTC is probably, at this point, put out a lot of guidelines in terms of who they're regulating and who they're not. The SEC has more said, no, this is or is not a security on a case-by-case basis, and maybe they gave a couple guidelines. I would urge people that if they want to learn more, Cole, Freeman, and Mellon is a law firm that deals with a lot of this stuff, and we've talked to them a lot, and they've just recently posted their quarterly review of the regulation, and they have a blog there that you can go and check out to learn more.
Okay, and Freeman and Mellon we can handle. How does one spell Cole in this case?
C-O-L-E.
C-O-L-E, okay, very good. So, Ken, tell us, what are the biggest challenges that your firm faces right now?
There's definitely the regulatory hurdle. We want to be sure that we're completely regulatory compliant. and that we match up to other hedge funds in the equities or FX space that in terms of security. And so there is no great custodian, and the custodians that do exist are slowly coming onto the space. There's no sort of broker, but those guys are also coming on the space. And so we're trying to do what a lot of hedge funds have a lot easier in in other spaces. And the second thing is that there's not a lot of data. This space moves so fast. Like I said, every month or two, you're really looking at a completely new space just in terms of regulation, data, trading volume, prices, brand new coins getting added to the market. It completely changes, and that's, I guess, what makes it so exciting.
Well, you certainly have a challenge on your hands. So let's get this clear. You're a hedge fund, so you are able to invest into cryptocurrencies, and then an investor, either through an advisor or directly, can invest in you. So someone can invest through you, and then you invest into cryptocurrencies. So that's how they could invest into the marketplace, or they could go directly into the marketplace and invest directly themselves, correct?
Agreed. If you want to invest directly into the market, it's really as simple as going to Coinbase, which is a website, and going onto the website, and just you can put in your credit card and buy Bitcoin right away. They charge a pretty high fee for that, and there are ways to do it if you want to use actual exchanges. But there are 5 big exchanges in the U.S., and there are tons worldwide, probably close to 50 to 100 that have decent liquidity, that any individual investor can go themselves and do it as well.
Okay. Ken, this is fascinating stuff, and as you say, I mean, the ground is moving under our feet as we're talking about it here. So a question we like to ask all of our guests, what keeps you awake at night? It sounds like for you, there are plenty of things to keep you awake at night.
The thing that keeps me awake at night is the market. It is 24/7, and so even on the weekends, it doesn't rest. The second thing that is probably also directly related to the market is how regulators are going to look at it. And so every once in a while, there's rumors that a country is going to release something. So it might be Russia, the U.S., Korea. When the China situation was happening with China. And so not all of them are at the same time zone as the U.S., unfortunately. And so sometimes got to be awake to sort of see what they say when they say it.
So another question we'd like to ask all of our guests here, Ken, what book on investing would you recommend for our listeners?
Sure. Dan Stefanica has a primer on mathematical modeling, specifically financial modeling, that I think is great. It's not for the average investor who is not looking to do mathematical modeling, but for me, I found that really helpful. And there's also the Intelligent Investor, which I guess is just like a super classic there.
Right.
It's a little bit different than what we're doing in terms of value investing, but we see ourselves as short-term value investors.
Okay. And let's have the name of that first author again.
Stefanica. I can send that over to you as well.
Okay, but for our listeners, how do we spell Stefanica? With a PH or an F?
I think it's an F. I don't want to botch it on here.
Okay. Stefanica who?
Dan is the first name.
Oh, Dan. Dan Stefanica.
Yeah.
Gotcha. Okay. Very good. Thank you. And I'm sure we have listeners that will be interested in that. Okay, and we'll put it in our show notes for in the summary so people can get that. Thank you very much. So give us your website for those who would like to know more here, Ken.
Sure. Altcoinadvisors.com.
And that's advisors ORS, correct?
Yeah.
Okay, so final words for our listeners here, Ken.
You might be seeing the revolution as it's happening, so definitely look into this stuff. It's super exciting space, and this is all about giving values back to users. We like to say that the big use cases for this stuff haven't come out yet. Something like StubHub, that all it does is connect two people together in a trusted manner. Cryptocurrencies could save you that 20%, and everything else sort of like Uber, Airbnb, etc. And so this could change the world, and it's exciting.
Yeah, it is certainly exciting, no question about it. So, Ken, thank you very much for taking some time with us today. This has been very interesting, and our best wishes to you and Altcoin Advisors in a very successful tiger by the tail that you've got here.
Thank you so much.
Okay, again, we've been talking with Ken Goodman, founder of Altcoin Advisors. You've been listening to Strategic Investor Radio on OC Talk Radio. We invite you to contact us at info@strategicinvestorradio.com, and you can go to our website to hear podcasts of all of our interviews and shows, strategicinvestorradio.com. I'm Charlie Wright, wishing you an enjoyable week and productive investing.
Strategic Investor Radio is a production of OC Talk Radio and is provided for educational purposes only. Content of this program and the views of the guests should not be considered as recommendations by OC Talk Radio or investment advice from the host Charlie Wright or any other entity attached to this production. Investors should always consult qualified financial, investment, tax, or legal professionals prior to investing.